Assalamualaikum and salam sejahtera to Madam Hanisa binti Johor and audience. In this video, we will explain about credit, cards and loan topic. Before we begin, let me introduce myself. My name is Nur Ain binti Masri. As shown in the slide, the table of contents consists of definitions, credit cards and loan. Second, types of credit cards and loans. Third, pros and cons of credit cards and loans. And last but not least, conclusion of credit cards and loans.
Assalamualaikum warahmatullahi wabarakatuh. To Madam Hanisa. First of all, my name is Wan Nur Fatihah binti Muhammad Fuad. So today, I will introduce the definition of credit cards and loans. Credit cards and loans both offer a way to borrow funds and have many of the same standard credit provisions. In both credit cards and loans agreements, it will typically find funds offered from a lender at a specific interest rate, monthly payments that include principal and interest, late fees, underwriting requirements, amount limits, and more. Mishandling either type of credit can undermine credit rating, causing problems with loans, access to good housing, and finding jobs. For credit cards, is a different class of borrowing known as revolving credit. With a revolving credit account, the borrower typically has ongoing access to the funds as long as their account remains in good standing. Revolving credit card accounts can also be eligible for credit limit increases on a regular basis. Interest rates are typically higher than loans. Credit cards also can come in many varieties and offer a lot of convenience. The best credit cards can include 0% introductory interest periods, balance transfer, availability, and rewards. On the other end of the spectrum, some can with high annual percentage some can come with high annual percentage interest rate combined with monthly or annual fees. All credit cards can usually be used anywhere electronic payments are accepted.
Meanwhile, for the loans refer to a type of credit vehicle in which a sum of money is lent to another party in exchange for future repayment of the value or principal amount. In many cases, the lender also adds interest and finance charge to the principal value which the borrower must repay, and in addition to the principal balance. Loans may be for a specific one-time amount, or they may be available as an open-end line of credit up to a specific limit. Loans come in many different forms, including secure, unsecured, commercial, and personal loans. A loan is a form of debt incurred by an individual or other entity. The lender usually a corporation, financial institutions, or government advance a sum of money to the borrower. In return, the borrower agrees to a certain set of terms, including any finance charge, interest, repayment date, and other conditions. In some cases, the lender may be require collateral to secure the loan and ensure repayment. Loans may also take the form and bonds and certificate of deposit.
Assalamualaikum warahmatullahi wabarakatuh. To Madam Hanisa binti Johor. My name is Nur Ain Sofia binti Asmawi Effendi. And now I will proceed with the types of credit cards and loans. There are 10 types of credit cards, which are the first one is reward credit cards. Okay, reward credit cards is typically give you points or cashback based on percentage you spending, and some even offer bonus points in popular category like grocery and dining out. Okay, next, cashback credit cards. Cashback credit cards make it easy for us to earn cashback or statement credit on our spending, although how rewards doled out varies from card to card. Next, travel credit cards. Travel credit cards offer us the opportunity to earn reward that greater, specifically towards travel, whether that means earning flexible travel credits we can use toward any travel purchase. Fourth, balance transfer credit cards. If we have some high interest credit cards debt on our hands, we may be considering using a balance transfer credit card to help manage and pay down that debt. For fifth, business credit cards. Business credit cards allow cardholders to keep our personal and business expenses separate while we earn rewards on all our business spending. Next, student credit cards. Student credit cards are starter credit cards of sort specifically geared to young people with a limited credit history. Next, secured credit cards. Secured credit cards are required to put down a cash deposit in order to secure a small line of credit, usually for a similar amount. Okay, next, store credit cards. Store credit cards are offered through retail stores to let the consumer charge their purchases and pay them off over time. Next, co-branded credit cards. Co-branded credit cards are store or brand credit cards offered through traditional and issues like Chase City or American Express. Next is for the last one is charge credit cards. Charge credit. For the last one is charge cards. Charge cards do not have a preset spending limit. Balance must be paid in full at the end of each month. Charge card typically do not have finance charge or minimum payment because the balance need to be paid in full.
As for loans, lenders offer two types of consumer loans, which are secured and unsecured. A secured loans refer to a collateral loan backed by property or collateral. Secured loan differ from unsecured loan by amount of risk the loan put for the lender and the borrower. Unsecured loan offer borrower a reserve to buy things quite quickly or pay off debts that can be due long back with high interest rates, and the terms can be tricky, like along. There are 12 types of loan, which are first personal loans. Personal loan is a category loan that typically have repayment terms between 24 and 84 months, and usually the easiest loans that bank will be approved. Second, auto loans. Auto loans are a type of secured loan that can use to buy a vehicle and house. Third, student loans like MARA. For mortgage loan, like it's used to purchase home. 5, home equity loans. Home equity loans are installment loans that receive lump sum amount of money and pay it back, usually 5 to 30 years in regular monthly installment. 6, credit builder loans. Credit builder loans are usually small and short-term loans that are taken out to help build credit. Debt consolidation loans. A debt consolidation loan is a personal loan that designed to pay off high interest debt, such as credit cards. Number 8 is payday loans. Payday loans are a type of short-term loan, usually lasting just until your next paychecks. Next is land loans. Land loans generally come in two forms, which are improved and unimproved land loans. Thanks, recreational vehicle or RV loans. RV loans can either be unsecured or secured loans. Smaller RV loans are typically unsecured, and luxury RV loans are secured with RV serving as collateral. 11, boat loans. Boat loans are specifically designed to finance the purchase of a boat and are available through banks, credit unions, and online lenders. Last but not least, family loans. Family loans are informal loans that you get from the family members.
So now we will proceed with the pros and cons of credit cards. Pros of credit cards, it can take advantage of interest-free days. Also may help in an emergency, can earn rewards and points, and with up credit card insurance. For cons of credit cards, is overdue bills tend to have high interest rate and could lead to a bad credit score. Also, interest is typically higher than personal loans, and interest and fees can add up.
And next we go to the pros and cons, or advantage and disadvantage of loans. So the advantage of loans is usually its flexibility and versatility, and it has lower interest rates and higher borrowing limits, no collateral requirement, and easier to manage. And for the disadvantage of loans, usually the interest rate can be higher than alternatives. Fees and penalties can be high. Higher payments than credit cards can increase debt, and property used as collateral, such as car or home, it can be seized if the borrower don't repay in timely manner, and it called secured loan.
Finally, the conclusions of credit cards and loan is credit cards are often more suitable for a smaller amount and everyday use. Besides, a loan is a money, property, or other material goods given to another party in exchange for future repayment of the loan value, amount with interest. So in conclusions, credit card and loans have different uses of various pros and cons. To decide on what is best for you, you should think about the goal you want to achieve by getting a credit card or loans.